Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Welcome back to the craziness that 2020 is. It is Friday here. Good. I'm feeling a little bit under the weather today. I got a bit of a headache, so not really as chipper and as uppy as I usually am. But nonetheless, TGIF heading into the end of June, and of course coming into the long weekend, which will be next weekend for the Americans. A lot of holidays, like for Canada, July 1st is a holiday. So going to be a little bit of holiday session, a little bit of window dressing right now heading into the end of this quarter. And then, of course, we'll have the first 2 weeks of the third quarter to watch. And of course we got this crazy ass celestial event that's supposed to frame sort of the middle of 2020. Thank goodness, halfway through the year. And unfortunately November, I think, well, not just like, who knows what it's going to be like, but November we've got another one of these coming up. So once we get beyond that, then hopefully things will start settling down in our society again. You know, for the purposes of our presentation here, we try to keep the message relatively simple. Breadth indicator, you can see, is definitely now negative. So probably not the best environment for us to be really aggressively hunting too many long ideas. If anything, we want to start seeing the fast turn back up to give us some sort of heads up that the market's trying to turn. So that might take a week or two here to develop it. This could be a little bit of a slog here. So looking at your sheet in particular, crazy conversations about US dollar index into this Apex event. Interestingly enough, US dollar index still moving higher here. You can see a bit of a shooting star. It kind of felt like the whole market kind of panicked on the open there this morning, and we're starting to recover now. And also, too, there's options expiry, so there's probably some funny business going on around that through today. I believe it or not, you know, especially like into the U.S. holiday, I actually like the thinking people are a little bit more optimistic. But the COVID cases and all that, holy jeez, it's really getting out of control down in the States. And, of course, it's pretty bad elsewhere in the world, too, so... Anyway, let's see how this plays out. Right now, my thinking is reload zone dips, then counter trend rallies, then tanks against lows, and then we start the other side of this. So lots of chop right now. That chop, you can see it in the risk on assets are coming off here still. Weird sort of way you can kind of see that inverted fractal kind of thinking. We're probably going to dip down against these lows, then rally back up against these highs to make a huge harmonic. Actually, it's interesting, speaking of harmonics, we had on Steven on the Daily Brief today. On Fridays, he did a great presentation on harmonic trading to the community today. Really cool stuff. So, we have been watching, and we are watching harmonic levels very closely. Right now, big hurry up and... Remember, we had that sell signal there from 1, 2, 3, 4, 5, 6, 7 days ago, about a week or so ago. It's still technically working. And we had a sell here on the crude. They busted it out, but now they've carved out a huge empire here. And lo and behold, Stephen was telling us that, gee whiz, this was a harmonic level for him to short crude up here. Jerk. Anyway, great trading, Stephen. You are the man. You know, the flip side of the equation, risk off. Bonds are working their way higher. And I have to say, it looks to me like we tried to leave this range. Economy feeling pretty good. Everything's going. We're opening the economy back up. And oof, no, things aren't nearly as good as we thought. So here we are back in this range again. Be interesting, you know, like I said, when we ultimately do hit one of these objectives, to go look at what that strangle trade ultimately did. But I'll tell you, as it stands right now, it looks to me like we're back in this narrow sideways channel again. Interesting to see the gold, broke out a few days ago. I was a little bit leery about the gaps. All the gold stocks sort of just went, kind of consolidated for 2 or 3 days. And now the gold stocks are starting to try and turn back up here. So maybe with the gold stock validation of this level, I can actually really believe that this thing's going to rock and roll higher here. And ironically enough, Steven's got a big old harmonic objective up here at about 1850, 1875. So what a coincidence. Botters, anybody who did have the balls just to pull that trigger there. Your target up in that 2000, big fat round number. It all makes sense to me. The question ultimately here is, do we get into a situation if the stock market really starts to melt down that we get into margin calls and people have to sell anything that they can to meet those margin calls? So jury's still out. Notice this high here was 1788.80, and we traded to a higher of 1796. So technically we've got a situation of higher highs and now higher lows. That 1666.20 level held. I wouldn't fault you if you're bullish. It's just not really a trade I'm too interested in. Very nosebleedy. And for whatever it's worth, I mean, you all know this, but Julian's our gold trader, and he's all super jazzed about gold right now. So if anybody's going to be leverage trading gold, it'll probably be Julian, not me. I do like, and I have been sort of mulling it over, I think I told you guys a few days ago, a couple of the gold stocks are starting to look interesting. Here's this gold ETF. These ETFs are often tricky to trade, but you can see 1 low, 2 lows, 3 lows, maybe, I don't know. Nice double bottom right off 25 level. If it confirms 71's your entry, 116, 119 happens to be 50% roll. And you can see all these gaps. I mean, the irony of it all is they're probably going to go and fill all these gaps in. So there's a trade idea for you. If you're a gold bug, it's just sort of sitting there. I think I told you the other day I was very interested in Newmont. I wanted to see a little bit of firmness, and gee whiz, look what we're getting. So gaps are still open here. This is a heartburn central kind of trade setup. But nonetheless, if you are a Newmont bull and you're kind of like, just give me a reason to get long, I thought it was fascinating. Kind of very much like that Nugget. The Nugget probably has a lot of these kind of stocks. They all sort of look like this. There's the bot entry level. You can actually front run the bot here a little bit, and if you're lucky, you get that nice push up. Then if we do go take out the highs, you move your stop to scratch, and if you bought this double bottom and the trade worked, right, rocking and rolling, then at least if it comes back to the bot level and you have to walk away at scratch, well, you actually have a little bit of a cushion in there. So, do you want to go and buy a whack of gold heading into the weekend here? That's always a question unto itself. But, it's weird. Past few weeks we've seen this happen. Where they set the market up to rally Sunday night, not knowing what's going to happen over the weekend. So really, this is probably like a bet that the shit's going to hit the fan. If the shit doesn't hit the fan, then we probably melt back down early next week. So, there's another, it's sitting there. Just because I either take or don't take a trade idea, that shouldn't change how you act. You just trade your plan. If you are a bot trader, if you are a gold bug, well, set up the levels are just sitting there. Maybe go take a look at a call option. Something like a $70 call or maybe even like an $80 call. I bet you could make some serious money there. Anyway. So that's sort of our conversation about risk on, risk off. And really, the stock market to me feels very, very heavy. Interesting to see junior stocks here. Haven't exactly broken out here. Obviously, if this goes in W's and we start ratcheting up here, then away we go. Kind of jury still out here. Maybe we might see some money come back into the small caps relative to the large caps as sort of an indication of value. And if that's the case, and we do actually see the small cap start to outperform, then probably that's going to do something. Like we said, our fast will start cleaning up, right? Because this is basically the entire market here, and then we can start sort of seeing some signs of turn here. So I think the jury's still out a little bit in that regard. Fantastic analogy, and it's almost funny. I didn't bang any doubles today, but I got one yesterday. I got another one the day before, so I'm not complaining. But here's a great analogy. Kevin and I were talking about this even before this show. Hopefully everybody can see. We at TRI, we love to see this kind of action. Hopefully you see down, up, down, did not break the lows, broke out. That's a W. And then it did it again. Down, up, down, broke out. That's another W. And then, if we change this chart to a weekly chart. Actually, yeah, this is the right chart. You can see all the way down here. It just looks like a train wreck, eh? But at this point, you can see down, up, down, held the lows. Hey, move higher. Down, held the lows, moved higher. So it shouldn't surprise you to hear that TRI people like this idea. Kevin, did you get in on this, or was it just that other guy who posted this? I don't know. I can't remember whether this was one of our TRI SOF club ideas. I don't even know if Kevin... Nope, he said he didn't. All right. Anyway, the point I'm trying to make here is this is at 40 cents. So, here's a great analogy where you don't know where the hell the top is, but let's just make sure to have our open order to sell half on a double. Get yourself into a risk-free trade. Get your original capital back in your hands. And if you want to, I even had some students back in the crazy altcoin nutso market would say, once I got this, then I'll do things like I'll sell half on a triple. Just because me personally, conservative, keep it simple, stupid. I like the idea. Let's not get greedy. Let's just work our business of trading, sell half on a double. But the point here is you're always still in this stock. So every time the damn stock doubles, you're going to look to just sell half of whatever your position is, but you are always still in the stock. So why am I doing these crazy levels here? Because you can see that, at this point, anybody in the public talking to, they go, well, why are you doing this? This is so stupid. There's no way this thing's ever going to go up to those kind of levels, right? This is a penny stock piece of shit. Maybe just take your 30-40% return on a nice little pop into the 50s, 60s, and just call it a day. Okay. Or don't tell the market what it's going to do. Just put yourself in a position that you can participate. And as long as the market keeps working in your favor, you just keep getting paid. So, boom. Instantly first fill. All right. Well, now I got myself a free position. Should I sell the whole damn thing? I don't know what's going to happen here. Why don't I just put an order up to sell another half on another double? Bang! Oh, hey, look at that. I got another fill. Gee whiz. Am I ever cool? Well, maybe I should just sell the whole damn thing here. Gee whiz, look how smart I am. That's a 400% return. And wait a day or two, and bang! There's another fill. How are you supposed to predict this? This is insanity. Now we're talking from 320, basically 10x off the lows. Well, maybe you sell it all now. Well, I don't know. Or maybe you just work another order to sell half on a double. And where's the next one? Wait for it. Bang! You just got yourself another fill. Don't be in the business of predicting. It's a mug's game. Could anybody predict this? It's right off the fucking top of the charts. But if you just put yourself into a position, build the plan, these are my rules for my plan, and bang, you just got another fill. I don't know, do we even want to bother to see whether we got another fill here? Well, by the way, bang, you got another fill. I look at you can't even see where the hell you bought the damn stock anymore. So if anything, this is how people get rich off of capitalism. And what really sucks, and I hate this about trading, is you'll have guys, that maybe will buy like here and sell here and be like, woohoo, look at me, 40% returns, ooh, I'm so smart. What they don't realize is that, this kind of shit happens all the time in the stock market. So anyway, kind of a funny story for you. It just goes to show, don't be in the business of predicting where the hell these tops come. Just put yourself in a position that you can keep participating every time they keep taking this damn thing higher and higher and higher. And I hate to say it, there's a bunch of stories that look like this. Kevin got one off. What was that? Laughing my fucking ass off warrants. I mean, they just went crazy. And I think he just kept spoon feeding the whole way up. I can't speak for him though, so I don't know about that. Anyway. Okay, head on over to crypto now. Message really hasn't changed a heck of a lot here overnight. Yep, he says he still has some of his laughing his fucking ass off warrants on the books. And by the way, there was another warrant today that the TRIers were trading, and the thing just went nuts. I mean, just absolutely insane moves. So these TRI SOFers are having they're just having the funnest time in the market right now. As for crypto, and actually it was interesting, we talked yesterday about how important it was to try and hold that clothesline. And you can see that we actually closed yesterday below it, and we're slipping lower here today. You can also see the very real battle at this trend line now. For us actually to even get bullish, we have to see the market get back above this trend line and then W out on the other side of the trend line. So, I sort of said this a week or two ago that we're doing a lot of technical damage to the charts right now, and it's going to take a lot of work to actually clean these things up. And I hate to say it, but I think that message still persists. And interestingly enough, if we draw reload zones, it sure looks to me like this is one hell of a resistance level up in here now. And the fascinating thing about this is, as I said, Stephen did a harmonics presentation on the site today, and it turns out that this was a Gartley, boom, 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 boom. But this exact Gartley fail level, turns out it was actually a massive harmonic. God, I can't remember how the hell that damn harmonic worked. It was just huge, but it pointed out, and join the site, watch the presentation today. It turns out that this was a very, very significant harmonic failure level off the higher time frames. And so Stephen was watching how price was going to behave at this higher time frame harmonic level. And this is a great analogy that you just wait and just be patient. And the market actually set the trade up perfectly there the other day, right off that level. Kind of that analogy. I only trade when I look over the corner, I see a big pile of money, and I just walk over there and pick it up. I think that's exactly what the traders did there the other day. I've got some puts on the books. I'm just going to leave it at that for now. Really no reason to tinker with this. And really, I don't see any reason why we can't trade down into here. Doom and gloom. Thanks, Brian. Great peachy, keen message. I don't know. This might, our July 1st window peak. I mean, maybe we dump into here. But I'm actually getting the feeling the more and more I watch price action that, we know that November is that big pivot. And I really get the feeling like we're going to do something like this. But we'll see. Only time will tell. Anyway you shake it, I just don't have any buy signals here. And there's no hurry for me to even think about being a buyer here. Short-term objectives, I still think AB equals CD, which takes us into these candle body lows. Wicks and tails like to be eaten, and maybe a test of the midpoint of this trend line. Good old 1.618. I could see a dip into here. Anything beyond that in the short term, I doubt it. But, fuck, anything can happen in this crazy market. And then just sort of a, follow-up to this. Nothing really different. We talked lots about the shit coins, shit perp index, so I'm not technically swearing, I'm just saying the name. Really, really good example. We should probably change this to like red. In fact, actually, ooh, even better example. I didn't even see this before. Let's maybe change that to like, what would be a fun color? Maybe, I don't know. Let's go with one of these funny colors. There we go. So I talked to you guys about this before. I mean, if this is really a bull, just go and break these old highs and just get it done. Interestingly enough, this is a concept that we teach in our level 1 program, institutional fingerprints. How do you tell? Because remember, institutions buy down markets and they sell up markets. Remember, public always loses money. They sell down markets and they buy up markets. Kind of sad, but it is a brutal reality of our world. So how do you sort of identify where the institutions did the selling and stopped a bull run? And usually the term that we like to use, institutional fingerprint, because looking back after this dump, we can look back and clearly see, oh, this is where whoever sold up markets, they stopped the bull, and so this must be exactly where they stopped the bull, or their fingerprint. So interesting how, and we have a very specific formula for measuring their fingerprint. I won't get into that today, but interesting how this range right here, if this still is a bear, if they're still in question about whether this thing is has any value at all, they're going to come in and they're going to defend the previous level that they stopped the bull. And really, I might argue that's what this is, right? Every time the bull gets going here, the public comes in on the buy side. Somebody steps up and keeps whacking this thing back down. You now know who that somebody is. I would just simply say change this to a line chart, and should we M out here and lose these lows, then this thing's in serious trouble. Right now, at best, I think we can say the institutional fingerprint war is being waged. Considering location, I would, if I was a betting man, I would sort of side with the bears here. And I would say, look, I'm from Missouri. If you really are a bull, just go take out these highs. Show me. And then I can get bullish again. But for now, just like the corn, just like the stock market, pretty much all of these risk assets, I think everybody's just on pause. And that's basically what I see in the market, everybody. So I hope you enjoyed that presentation. Not a heck of a lot of new ideas. I'm not buying much here. And if anything, I'm just kind of just biding my time. I gotta go. What do I have to do today? I gotta get a life. All right, everybody. Have yourselves a great weekend. We'll see everybody for broiler chickens on Sundays. School program, everybody's rocking and rolling. Just keep focused, keep working, and of course all you out in the public, just make damn sure to remember what your number one job is. The market could easily punish people very, very badly here. So go slowly, don't take too much risk on any one single idea. Trade those vetted setups. Slow and steady wins the race. And of course, PMA for the win. All right, everybody, all the best. And bye for now.